Everything's going smoothly. All we got to do is press live. Okay, so we are alive, ladies and gentlemen. Thank you all for being patient with us today. I did get my camera up and running. Technical difficulties, but hey, we are live streaming now with you from the jungles of Costa Rica. We are going to be going over our favorite crypto assets today, starting with Bitcoin, moving into Ethereum. We're also going to take a look at Link. Exploded out of the box yesterday. That was nice to see. Congratulations to all the Link Marines. I don't know. I guess that's what you might call yourself. Like a diversified portfolio. We're also going to take a look at some of our favorite DeFi players. AAVE, Band, Avalanche. Avalanche, by the way. What amazing technology. I'm not smart enough to know how good it is, but I just trust the people who are smarter than me to know what it is. So anyways, we'll be going over that as well. I really appreciate your guys' support. Thank you for all the new subscribers. Over like 500 new subscribers last night alone. Again, too, we're going to keep pounding away with these live streams on a day-to-day basis, going over all of your guys' thoughts and questions. So for the community live stream aspect, this will be at the end of this episode. But with that in mind, what we're going to do is basically dive into the charts here. And we're going to start with Bitcoin, our favorite, our monetary leader of this ecosystem. And I guess overall, one of the most important technological evolutions that we've seen since the internet. I think that's a really important part to understand, that these are pretty big deals here. And even though the evolution of this tech evolves through many different spaces and faces, Bitcoin and what we were witnessing in I guess proof of work concepts, but more important, this ability to solve some of the trust problems in the human species is really important. So we're gonna switch over to this one. You should be able to see our chart now. Sorry, it took me a second to get this all up and loaded because not sure, my camera wasn't working and it put me a few minutes behind, but nonetheless, should be able to see Bitcoin open now on the 4 hour. Yesterday, we got what I believe to be our spring, and we have not broken out of the top part of this range yet. Again, one of the reasons why we want to show up daily is to consistently follow these trending patterns together. Now, we made a little bit of conjecture. One of the interesting parts about using Bitcoin kind of as our market leader is understanding the nature of this market, and a bull market is led by the market leaders, right? So first, Bitcoin, Ethereum, then DeFi. If you were here in early March, April, May, June, July, you would probably notice or have noticed that some of the DeFi sector was absolutely explosive. You have things like Wi-Fi that really took the cake, and these are technological innovations within this sector. Now, one of the important things to remember that this is very similar to the evolution of the internet, and the internet is actually made up of a bunch of different protocols, and what we use today for this live stream, etc., is made up of a bunch of different functioning aspects of that internet. So it's not just like the internet, right? Bitcoin and Ethereum, and I think a bunch of the other DeFi plays are going to become the financial sector, right? It's just the financial sector versus the internet. It's all these underlying protocols. Now, the internet itself will probably be replaced by a lot of this stuff because it's losing a lot of its transparency, trust, and I guess the key word here being decentralization has been put in the hands of some of the big tech companies. I almost got banned off Facebook the other day for a pretty simple thing where I said, hey, don't be a bitch with your life because you only get one of them. So go out and enjoy it. If you want to go skydiving, jump out of the plane. You got to, enjoy the waiver of the fact that you got a contract to death when you sign up for life. Anyways, point of the story is we saw what we believe to be the spring yesterday, highlighted by the significant amount of supply coming in to test the market, but also producing a higher low. So we had our selling climax, followed by our secondary test, and then our spring all produce higher lows. This is important for a few reasons because, well, number one, our money, Bitcoin, is helping fund the other venture capital sector. One of the big changes that we've seen recently, for those of you that don't know, if you are new to investing, if you're new to this space, There's something called the CF regulation, which basically allows for crowdfunding regulated for new companies like equity startups, etc. So you could raise up to $5 million via capital crowdsourced fundraising, which means you didn't need to be an accredited investor and you didn't need to have over, I think it was like $1 million. The reason that's a big deal is because you want everybody to be able to participate in the financial sector. But regulators, try to make everything difficult. They say, oh, you're not smart enough, you don't understand the risks. But look, guys, you really don't want to be regulated out of your ability to go play around and make mistakes. I don't want to be regulated away from someone's like, oh, you're not qualified to touch the stove. Only stove touchers can play with it. Like, no. I would rather we have less regulations and allow more people to get burned through the learning process, myself included. All the great lessons of life are learned through kind of touching something that's hot and going, okay, ouch, what can I do next time? Make sure I don't get burned when I'm cooking effectively, right? So Bitcoin Spring here is going to be probably a bit of a slow mover because right now we're seeing a lot of momentum come out of the rest of the DeFi sector. You've got Wi-Fi up 14% today, AAVE up 10%, Avalanche 36% today alone. That is huge. Just for Avalanche alone, Uniswap token up 16% at $8, GRT up 20%, and then Sushi up another 14% as well. The reason this is important is because, again, how I started this conversation is that the internet is made up out of multiple protocols. We have our money, Bitcoin. Now we're going to be building the rest of the financial system, probably with everything else, because it does what Bitcoin's supposed to do. Let's not really mess with it. It's chilling out, currently at $36,000. I'm using the Heiken Ashi charts today. We can even switch back to our area line, just make this a little cleaner. We are probably we might actually get a little bit of a deeper spring here too. Again, it's usually, I like to see it break below the rising gradient bottom of our trend line here, and we did not do that. Like, especially if you look on the area chart here, we've stayed pretty much right on top of that rising channel. Most of the time when I see a spring, I like to see it break below the box. Not necessary, but it would be sweet to see that. Again, here you can kind of see that in our previous reaccumulation channels where you had springs that came significantly below the box. Here we didn't get that. We still have rising candle wicks at the bottom though, so again, quite bullish, and lower highs each time. Now, a big part of this move is going to be that next check, and that's one of the important parts. And then this will also equate to our longer understanding of, okay, are we actually witnessing a bigger trading range, realizing that there is institutional selling come in. There are people taking profits up at this high because a lot of us were buying back in March, April, May, June, July, when Bitcoin was down near $3,000 to $10,000, and you're up like, if you bought it even at 10 grand, you're up like 4x, which is huge in any traditional market. So that institutional selling, creating more volatility, in my mind, we might see another big trading range. So we actually might get a further spring downwards. One of the parts about understanding trading ranges is that they're fractal nature, first and foremost. And secondarily, we don't follow things like pennants or head and shoulders. Although they may exist within the trading range, unless they exist within the trading range, it's almost useless data to us, and it just gets in the way. I don't know how many times I've heard people talk about like, oh, it's a head and shoulders, it's a bearish. Well, not in a bull market. Unless you know the overall trending and bias of the market, charting a head and shoulders is almost a useless idea because we are in a bull market. I highly suggest studying people like Jesse Livermore to understand this. He made hundreds of millions of dollars in the 1930s, and even more importantly, study people like Jim Simmons who have made hundreds of billions of dollars trading, not investing, trading. But to do that, they're significantly more talented than you would, and I are, let's say, is the average retail investors and traders. So what we want to do is first study and invest, and then secondarily, if you ever want to get into trading, this is how you would do it. So I do suspect we're actually going to see a larger trading range form. Again, and that's going to be a hugely indicative point of where we go next. I would love to see $23,000 Bitcoin one more time. If we go to our weekly, this is conjecture we've made pretty much, I don't know how many times since, what month was that? What month were these back in? 2019 when we ran up to, okay, yeah, here we go. So I'm looking at the weekly right now. Let's clean this chart up a little bit. This is fine, pretty simple version of the trading ranges we've been watching. This initial run to $13,000 was not a bull market. This was actually from our selling climax to our automatic rally. So it was the first part of a trading range. Now, what's important here, and what I tried to reiterate to people during this moment, was that unless we see a touch of the 21-day moving average, I don't think we're in a healthy bull market. So now the downside is my overall self is like, hey, Tiho, guess what? We haven't touched the 21-day moving average since 10 grand. That to me is very unhealthy. But at the same point, we have, again, a new pure type of asset. For the first time, the world's biggest funds are interested and accumulating it. As we had gone over in some of our Glassnode ideas as well, the number of wallets holding over 1,000 Bitcoin has dramatically increased. So we know that this ecosystem is made up almost entirely of people who manage hundreds of millions to billions of dollars. And their price targets are already set in the hundreds of thousands of dollars range. So even though I would really like to see a healthy return somewhere between $17,000 to $23,000, at least if it were to drop today, we might not get that. We might not get this kind of traditional, and again, I'm pulling this from more traditional markets. Like if you were to invest in more traditional markets, this touch of the 21 moving average is something we've seen countless times before in multiple different ecosystems. And it's even relevant here. Let's actually use our traditional candles. It might be a little more visible. And log chart will make it even a little better. So here we are looking at the log chart on the weekly. And what I want to point out is this relationship in the previous area and the 21 moving average. So here up, 21 moving average, up, 21 moving average, up, 21 moving average, 21 moving average, 21 moving average, 21 moving average, and then finally a blow off top. That is a very healthy market to me. The fact that we haven't seen that is kind of abstract. Now, again, here's where we could make the conjecture of the much bigger trading range. So again, we go out to the daily. We go back to this Bitcoin chart, or this top one. I'm going to have to clean these up so I remember which one has our overall drawing on it here. Okay, here. So again, on the weekly, no touch of the 21 moving average. But we did drop down and touch the 9. And we got really close here as well. So I do suspect that what we're actually probably witnessing is a bigger trading range, because this type of idea would give that 21 moving average the time to catch up here before it would touch somewhere like the spring before going much higher. So I think what we're about to witness is basically a much larger trading range. So even though we were, let's get rid of our 3 moving averages here. We'll take off log chart because it's not relevant for these smaller time frames. Even though we were following this rising trading range, we saw a spring within this trading range. Again, this might be just basically forming into a much larger trading range, giving us that time for the 21 moving average to basically get up this high. That would make me feel so good. Even if we don't go to $23,000, if we see that 21 week moving average come up this high and we see wicks down there, that's all we need for a healthy market confirmation before we go much, much higher. We've already made conjecture that Bitcoin's going to $85,000 to $120,000 pretty easy. I think the next cycle will be about 75 to 85,000. So during that process, don't get emotional. Remember to keep investing. Like one of the best things you can do is learn how to flex those investor muscles, which is just keep showing up and just keep investing. Now, once we get to a market cycle high, that's a different story. You'll want to be investing in things that are significantly lower, but seeing as our whole market is basically in a bull cycle right now, it's more than effective enough to keep investing in just this kind of simple playground. So super bullish on Bitcoin and Ethereum. The market moves together. In case anyone wanted to know, Ethereum is actually up higher than Bitcoin on a day-to-day basis. So if we go to Ethereum, I'm sorry guys, I had all this stuff open and then we had to restart the computer right before the stream and blah, 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 blah. Anyways, it's my fault, but it just means I have to do some of this on the fly here instead of prior to doing it on the fly. Okay. So if we go and we're looking at Ethereum now in the 4 hour, we do see something quite similar. we're still closing above our moving averages on the 4-hour, which is quite strong. A much clearer spring on Ethereum. Ethereum actually might be closer to breaking out here than Bitcoin. As again, we went over yesterday, and when we can do it again here too. If we go to Glassnode and we look at Ethereum, the amount of Ethereum on open exchanges right now is constantly decreasing. The exchange balance stacked. What we're looking at right now is a visual, well, in a second here, is a visual representation of the amount of Ethereum left on exchanges on a day-to-day basis. So as you can see here, we started to drop dramatically from August. We had a little bit of a spike of more Ethereum come onto the market. This could be, again, more retail traders. Ethereum it launched in I think the end of 2017, something like this, or the beginning of 2017 when they had their ICO. I would have to double check on that. But we could be seeing more retail money come in because those early days were not full of institutional investors. Those early days of 2017 were filled with crazy weirdos like me who were like, yeah, let's invest in weird technology that's never been tried before and unaudited smart contracts that get locked up in DAOs and then reversed because we made a mistake. Those were not big funds. Those were weirdo people like myself who were participating. So this spike here recently up, it could have been, again, more retail investors. But if you look at the overall balance, we've seen a massive decrease of at least 7% here leaving the exchanges overall. Plus you have Ethereum 2.0 now staking millions of them. I think if we go to our Dune protocol, let's see here, we'll take a look at Ethereum. Where's my dashboard for Ethereum? Dex metrics. Oh, geez, hey. I would like to have all this open before, guys. Ethereum 2.0 staked. I don't know why it's not showing up. Ethereum 2.0. Let's see how much Ethereum there is locked up already. Confirm the deposit contract. God, I'm sorry, guys. I tried to have all this open before, but we just got pushed back on having everything. I don't know where we're going here now. Let's take a look. So Dune Analytics is a great place to look at other variations of what's going on the blockchain sector. Normally they have the amount of Ethereum locked up. I don't know why I can't find it right now. Anyways, we'll skip this, but it's over like a million. How much Ethereum is locked in 2.0 already? This will be a fun thing to try to find out. So more than $1 billion staked on Ethereum. I wish I could find this on Dune Analytics. If any of you guys know where it is on Dune Analytics right now, why they've taken it off of the front page is kind of ridiculous to me. I wish they hadn't done that. It was a pretty important metric to be paying attention to, guys. Favorite queries. Whatever. Fine, Dune Analytics. You've lost my interest for not showing me like the one or two simple things I want to know, which is how much Ethereum is staked in 2.0 right now. Anyways, I still like you, Dune Analytics, but you've made it very difficult to find like a pretty important piece of data. So we'll skip that for now. But either way, we can look back again at our Glassnode data, which does show an obvious decrease of Ethereum on the open market. And when you see liquidity leaving the market, the volatility of the price is much, much easier. So that kind of leads us into the DeFi plays. Sorry for wasting time there on trying to find that. Next time I will make sure they are all open. I think it's such an important part of the Ethereum placeholder right now. I'm surprised that Dune Analytics doesn't have that at the top. Like I want to try to find it now just because I'm upset at them. I'm like, what do you mean you're not showing me Ethereum 2.0 Dune? Like, get your together. Basis Cash Maker DAO Uniswap activity. Like, who cares? I don't want any of that. Just Ethereum. Okay, whatever. Moving on. Next thing. Okay, so our favorites in the DeFi world right now, in no particular order. Let's start with Link. We'll clean this chart up. I don't know why I have such a messy chart here. We'll go to the daily. Thank you to some of our private members who actually, let's make a point of giving shout out to some of our private members because they put a lot of work into this. So for those of you that don't know, we manage a private mastermind group. I'm going to give a shout out to Glasswalker, who shared a fantastic link chart yesterday. Let's go ahead and open that up in the background as well. God, not prepared because of that camera delay. It really kind of pushed me back, but nonetheless, I don't want to complain here. What we're going to do, we're going to open this chart and we're going to give a shout out to Glasswalker, one of our private members who shared this. I think this is a really beautiful version of Link. Again, looking at reaccumulation, what he's done a great job here. He's put the reaccumulation pattern up at the top. As you can see, we had a nice run into support, a break into SOS, and as soon as we got basically into that automatic rally in SOS place, we started to break out. I do believe we're going to see a small accumulation of Link before breaking out to probably significantly higher areas of accumulation. Jeez, I'm just so out of organization today, guys. Like, what? What? I guess it's the weekend, though, right? Should give myself a little more credit. It's the weekend, ladies and gentlemen. Who cares? Shouldn't be that important. But yes, so effectively, this is what we were looking at for Link. Kind of a nice variation. It's not how I was watching it, but definitely seeing it drawn like that is a great way to go. So you had your primary support here by your buying climax, your first secondary test, your spring right here, a jump against the creek, your first primary SOS. We're probably going to see a bit more of a backup phase around this 20 to 21 spot. And then I think Link is going a lot higher. Basically, Bitcoin, Ethereum, and Link are our market leaders. Together, the three of those make this ecosystem run more efficiently. Bitcoin is more valuable because of Ethereum. Bitcoin is also more valuable because of Link. I'm in no way a maximalist. I think it's important to recognize that, again, like the internet, the financial system will likely be made out of multiple protocols that are interacting together, not just like Bitcoin, right? That makes such little sense, especially if you're using decentralization as an argument point for something. So Link's had a really powerful run again since the test here, 185%. Jesus, what a volatile box. We were originally charting this as a rising gradient bottom. And again, this is that fractal problem that we were looking at with Bitcoin. Is right now what we could actually be witnessing is the rise into resistance before we see another spring down. So I do suspect that this is probably what we're going to witness for Bitcoin. And the plus side, as I had mentioned, this gives us more time for that weekly 21 moving average to catch up through this new trading range. So Link's looking good. Everything is looking really powerful right now. You go over to AAVE, which is up another 17% today. Our rising gradient bottom. Again, here's another great example of why we don't pattern trade. Like most pattern traders be like, oh, look, it's a rising wedge. It's going to break down. Well, it didn't break down. So how useful is it to think it's a rising wedge? We're in a bull market. None of that matters. Anyone claiming to be like, oh, they're pennants or head and shoulders, they're rookies is what they are. They're rookies. Because this is pretty important, again, to understand that what we're trying to do is follow these horizontal trading ranges and look for breakout patterns from that range. So we'll go back to our area chart here. It looks a little cleaner. We saw our spring. As soon as we started to close above the POC, a dramatic price increase for AAVE, already 100%. So this is, again, in the private newsletter we sent out the other day. This is what I call my venture capital bag or my DeFi bag. I make small investments and I have a 10-year outlook in them, and I accumulate smaller amounts of them each month as well. So it's a great last 2 months of accumulation for some of these. I've mentioned multiple times the DeFi sector has been the leader, so keep your eye on it. Band is another great example of this. We saw a nice inverse head and shoulders. Again, the only reason you want to do pattern trading is through the horizontal trading range. So if you have a horizontal trading range and a pattern starts to form, well, that's more valuable. Pretty much as soon as we broke out past here, we've seen a lot of momentum. Again, a lot of volatility in here because retail has more access to this sector. Again, I like that retail can jump in, but it does make it more volatile. I'm sure a lot of you have noticed, for those people that are in the live chat, the people like, oh my God, I lost $200. What do I do? Should I be buying or should I be selling? Like, those are the people that make the market more volatile because they don't know what they're doing. They're not big hands. Because look, institutional hands can be weak as well. It's not just like a retail investor who necessarily has weak hands. Institutional hands can have weak hands too. They can be ill-informed about technology, and they can be just looking to get out of a particular position and trying to enter another. So band here has a lot of potential. Again, what we're seeing what looks like it's going to be a larger reaccumulation pattern. If band starts to turn around here and you see something like this, again, another reaccumulation pattern before breakout, I think band can go a lot higher. Our initial, well, first off, band is very high already. I think it's up like 5,000% since some of its earlier days. Let's take a look here on the, yeah, so if you had gotten in band at the beginning of 2020, down at 23 cents, we are up 5,000%, or basically like 50x, okay? So we're really high up here already. But this to me is a very nice reaccumulation pattern. Again, you could even draw it as some of the other reaccumulations that are a secondary reaccumulation after decline, even if you ignore the head and shoulders that we have been watching. So I keep accumulating these things. Even if band ends up being worth nothing, that's kind of the point of the venture bag. It's like an asymmetrical bet. Could be worth nothing, or it could be 1,000x what it is today a few years from now. So I try to look at the whole sector like that. Investing and trading are two different playgrounds. In terms of actual leverage trading in these more volatile markets, it's kind of stupid if you ask me. It's just very easy to lose money. Much easier to have a buy long hold position in the venture capital sector, and then if you want to trade like the riskier plays, Bitcoin is sexy as fuck. Look at how sexy these trading ranges were for Bitcoin down at $23,000. This is some of the sexiest leverage potential like known to mankind. Like, this is a wet dream for leverage trading right here. And like at max a 10.42% trading range, even on the wicks. Like, what? Are you kidding me? And it was even thinner here too. From the top to the bottom, you're talking about 7.8%. You could have opened a 10x trade here at the very worst spot, which would basically be like you made a rookie move and still been in your 10x position without getting liquidated. Like, that is such a sexy trading range. Oh man. But here where we are now, much too volatile. And these represent that volatility too. Like if we look on the 1 hour for band here, and we measure the volatility of these boxes, you know, I'm kind of a misnomer. I actually took a leverage position at 7.7. I'm still in that play, but you measure the price spread here, right? And we're talking about 36%. Like, good luck ever holding a leverage position in there whatsoever. Now, I want to do something fun and kind of different for the next few charts. We had someone give us some momentum indicators that they made. I'm not going to give them a shout out to where they sell them yet, because I'm not totally convinced I love them, but let's go over them and kind of play with the momentum indicators that they gave us. So right now we're using the Heiken Ashi frames. Oh, sorry. And this is basically just shows trend direction. I really like using this over candlesticks, and I like even more so using the area chart over candlesticks. Anything that removes data from my screen, again, like the area chart, like, oh good, look, hey, no more candles, it's all gone, just up and down, single line. Anytime we remove data, it often makes it easier to come to our own conclusion. But they gave us this fun one. So it's called the CryptoVac. I would take it out here, and it's an ATR. So it's basically a Bollinger Band and moving averages. So right now, we're closing above the top of the ATR, which is basically closing above the top of its longer term Bollinger Band. I think it's like the 4 to 6 hour. I'd have to double check on all of their chart patterns here, but we're effectively at the top of the trading range too, right? So if you were to measure a new trading range here, horizontal like this, we can see that we just had our spring back here. Now, one of the other fun ones that they gave us is called CryptoVac A and B. So again, we'll just kind of put these on here. It's going to make the chart super messy, and I really don't suggest you ever trade with this many indicators. I'm just kind of highlighting some ideas here. So what's kind of fun is it highlighted the spring, which is super cool to see. It's always nice to see that okay, well here, look, they're highlighting the trading range of, here's the areas of resistance or support and resistance. And we'll actually turn these two off and just go with the bottom one for now, because I think it's the most relevant. So the bottom one here, it's measured pretty much our spring, pretty close. It was a little off. Again, no, we're on the 1 hour. That's why you want to be on larger time frames. Okay, there we go. So on the larger time frame, boom, it measured pretty much our spring bottom. So that spread that was looking at an entry was around 9 to 10%. So it was pretty close. So what we're going to do is, because I'm new to these momentum indicators that they gave us, we're going to test them out and see if I like them. Only use a lot of these things in the higher trading ranges or higher time frames. If you're using momentum indicators on lower time frames, it's going to absolutely destroy your ability to make like cognitive decisions, because you won't have any viable data. But this point here, it aligned with one of the best points of entry here. So I want to keep an eye on that. And it's actually done that a few times. So if I go over and we take a look at Avalanche, Avalanche's previous buy signal on the 1 hour, I believe. Again, higher time frames are better, but we don't have that data here on Avalanche. So it's basically its buy signals were here, which is pretty good at around $2 to $3. And what we're looking at here, a spread, big spreads though, guys. Like, do not play with leverage in the DeFi sector unless you're a goddamn champion, or if you're okay with losing money, one of the two, because it's going to be so easy to lose money there as well. But these are kind of fun. I'm going to test these out here because they did give them to us for free. I'm sure she charges for them. But I like momentum indicators, especially if you're mid trade. And again, I would kind of stay away from the DeFi sector using momentum indicators just because of how volatile each of these are. So we went over most of our DeFi plays. We went over Bitcoin. We went over Ethereum. Great. So we can probably use the rest of the stream to go over some of your guys' thoughts and questions. Again, one of the fun parts here is that same momentum indicator actually threw a buy signal when Bitcoin chalked down to 33,000, right when we hit our secondary test. So I've actually been pretty impressed with the retroactive lookbacks. It didn't get the trading ranges that I would find the most sexiest though. Like here, like this 22,000 range. This was some of the sexiest trading ranges I've ever seen, and it didn't call those. So I would be weary. I think even on the 1 hour, I'm not sure if it gave any signals in that area. It completely missed this trading range. So I guess that's kind of one of the interesting parts, is the horizontal trading range is a hell of a lot better than almost any momentum indicator or any indicators that you can use in general. So that's why we focus on just finding these horizontal trading ranges. We look for the springs, which are highlighted by a significant amount of supply volume coming in, but not being able to break the trading range. Your final LPS test before a big breakout occurred multiple times. So you can kind of really get rid of all that data. And again, I think it actually makes it more distracting when you have, like, look at how distracting this momentum indicator could be, right? Like, how many freaking signals are going on? Don't get me wrong, I like it. I think it actually provides some really valuable data if you know what you're looking at, and you're looking to follow the momentum of the market. Like the other day when we had these were both buy signals, effectively these spikes below the volume indicators. Those were at 31,000 and 32. 31,000 and 32,000 again, which is like some of kind of the peak selling aspect of that trading range. So they do provide some valuable data, but more importantly, the horizontal trading range is significantly more powerful and less distracting than some of these other trading range. But shout out to Super Kitty for making those and sending them over our way. I will keep testing them out and kind of let you guys know how I feel about them. If we get some aligning data signals, and again, there's a bunch of ways to look at this, like this one too. I was comparing, I thought this one was actually kind of nice. For those of you that have been following along with our trading like lessons in our mastermind, let's go back and retroactively look at this 21,000. So what it does is really, what I like here is it actually highlights the areas of the finalized selling in each of the trading ranges. So it's almost like it highlights phase C. If you know what I'm talking about, it highlights basically the selling climax before the breakout. So I do like these indicators. I haven't been able to use them enough to highlight them, especially when we can just look at the trading range and go, yeah, here is our spring, noted by our volume, and I don't need all this crazy information on my screen distracting the hell out of my eyes. Like, whoa, look at all that information. But again, it was actually pretty spot on. Look, especially for the breakout here, look, as soon as your chart started to close above the middle moving average and outside of the Bollinger Band cloud, boom, boom. So there's definitely valuable data there, but I prefer less information and just focus on studying your Wyckoff trading ranges. I think it is a very, very powerful way to be better at playing this game. So today's episode will now lead into the community chats, and we'll go from there. So back up to what I believe is now going to be a larger trading range. Yeah, we could actually see, again, a spring down here, maybe even as low as $34,000. I was hoping to see it on the other day before this down started to happen when we made our video here. I thought the spring would come down into this point of control line, and it hasn't yet. So I am looking for a deeper spring still. That would be great to really test this trading range before we move off any higher. Okay, so now for the rest of the episode, we're going to be taking a look at your guys' thoughts and questions. So let's go ahead and do that. Oh, by the way, guys, give us a thumbs up. If you're new to this channel, please hit that subscribe button and ding the little notification bell. That way, anytime we go live, you guys will be notified. We will be going live every day that I can for hopefully the rest of the bull market, because I know the higher we go, the more retail shows up, the more people are likely to lose money. And that's really what Richard Wyckoff's whole sentiment was. Like, let's try to stop the average small guy from losing money. And that's basically what we'll go into. So for the rest of the episode, we're going to go over your guys' thoughts and questions and kind of dive in from that. So Ethereum to Bitcoin chart breakout. I stopped charting Ethereum versus Bitcoin. It is entirely on its own play, and relating them from one to the other stopped making any sense in 2018, 2019. So I don't find that as valuable as I used to. I used to always only chart versus Bitcoin, but there's been a big sentiment shift in this market where that's not the game anymore. These big players are interested in alpha, basically. Oh yeah, so you wanted me to take a look at Uni as well, so I've got that open here. Nice horizontal trading range before breakout. I think we're going higher. We'll probably hit $10 here to finalize this run before we see another larger reaccumulation pattern. So if you didn't enter that trade already down near $3, it's not worth entering now. This is a short run. What's your thoughts on the potential of Dash, mate? With some of these older proof of work coins like Litecoin and Dash, it's harder to say. The DeFi sector is absolutely incredible. Things like Avalanche put Dash and Litecoin to shame because it's just way better technology. Like I can't repeat that enough. Avalanche is amazing technology from what I've read. It almost deserves it. And first off, I don't know, someone the other day was like, "Oh, Avalanche must be paying you a good gig." No, I just love Avalanche, by the way. No affiliation between me and them whatsoever. I fucking wish. No, they just got great tech. Let's see another question here. Charlie Brown says, "What's your thoughts?" Oh yeah, on the potential of Dash. So I would be more over Dash. I would be more interested in Avalanche. Like if you're like, "Do you want 10 grand in Dash or Avalanche?" You're like, "Avalanche, please." So that's how I feel about Dash. I don't know. That's not a great answer, but that's my answer. Scott Block says, "Do you chart against Bitcoin or you only used to, and why?" I always only used to, because when we first got to this ecosystem, everyone that was like me was interested in acquiring more Bitcoin. But now you have some of the world's largest hedge funds here, like Jim Simmons. For those of you guys that don't know, Jim Simmons is the most lucrative trader in history. Jim Simmons, the American mathematician, billionaire hedge fund manager, and philanthropist. He's made more money than George Soros, Warren Buffett, all those guys. He made 4 to 5 times more than them, and he was a high frequency trader. If you don't know who Jim Simmons is, your mind will be blown by learning more about this guy. And if you type in Jim Simmons Fund, Renaissance Fund Bitcoin, you will happily notice that the flagship Renaissance Fund, who has, I think $166 billion in assets under management, 75 that they're throwing in through Medallion into cryptocurrency, they arrived here in April, right? So they got here at the very beginning of the bull market. And so I think that they are not interested in getting more Bitcoin. They are interested solely in getting more US dollars. As a matter of fact, if you listen to Jim Simmons talk about the US dollar, he thinks they should be printing even more of it. So there's that. And this is, again, the most lucrative hedge fund manager in our history. I don't know who else you would trust more than that, right? There's nobody that's made more money than that guy. Like, think about it. Look, let's take Michael Saylor as an example. Here's Michael Saylor with his 1 to 2 billion, and then you've got Jim Simmons, who's managing 160 billion. That's a whale in the fish. Like, I'm like plankton compared to those players, right? So I'm not saying Michael Saylor's not moving around an enormous amount of capital, but if you compare him to Jim Simmons, he's got nothing. And that's a big deal. When these guys are interested in getting more dollar, not Bitcoin, that really changed the market sentiment. And ever since these guys joined the ecosystem, everything's been against the US dollar, not against Bitcoin. And that's been a huge change in our ecosystem, for better or for worse. So anyways, check out Jim Simmons. I think that's important to do. How do I join your private group? Okay, Joshua Morrison, great question. If you guys want, you don't have to, you can go to arcanebear.com/private. The links are down below. It is a private newsletter and a mastermind group, and we're actually working on hiring more people to help produce as much valuable content for you guys as possible. It's a no question asked refund guarantee. So if you get there, you try it out, you're not happy, we'll just give you your money back. We don't need it. We're just using it to help hopefully build more content for everyone. So if you would like to, go ahead, give it a shot. There's no risk for you, basically, right? We're always happy to give you a refund if you don't feel you got the value out of it. But out of the hundreds of people, we're almost at 500 people in there. I think 7 have asked for a refund. Like, it's a pretty good number. So anyways, do your own homework, do your own due diligence, but that's up to you. arcanebear.com/private, or just arcanebear.com. You can find your way around our website. Print more USD. Yeah, again, I listen to people that have made hundreds of billions of dollars, so I suggest going to listen to Jim Simmons. He has a wonderful 3-part series called Mathematics, Money, and Making a Difference at MIT. He is an MIT professor. And again, these guys have made more money than you or I. So instead of listening to me, all I'm doing is sharing what they've said. Killzil Grinder. I don't know how to say. Killzil Grinder gave us $3 in euro. Thank you for that. I appreciate the super chats, you guys. Anyone who gives over usually $30 in a super chat, we give that money to Kiva, which is a nonprofit organization that helps the underbanked and the underserved. Can you turn up the volume a bit? Okay. See, guys, I apologize. There's it must be because when we went offline, it reset all of our settings again or something. Stupid computer. It kind of screwed everything up here. But today I had to. Oh yeah, wow! Look, the volume is much lower. Okay, that should be better. Yeah, when we had to restart and reset everything, I think it kind of threw us off. There we go. It should be better now. Any thoughts on Kava? Okay, we'll go over Kava. Kava is actually one I would put in the DeFi basket. I just try to focus on a few simple things and not overrun my portfolio. Kava is in there though. I have Kava, Ren, Sushi, GRT, not ones I've invested in, but they're all in my DeFi bucket. So I would have put money there, but I picked 6 and I went with that. We do have a breakout of Kava out of its trading range so far. We could probably see Kava at $6, but again, venture capital plays here. These are all asymmetrical bets. They could be worth nothing, so keep that in mind. Whereas Uniswap is probably a better investment than Kava, just because Uni is freaking amazing technology, and it's going to be around for the long term. I really appreciate the thoughts. I don't know enough about some of this. I do rely on people that are smarter than me to help give me answers. Like for instance, if I have a legal matter, I don't like start studying how to become a legal representative. No, I actively seek the advice and support of people who have been lawyers their entire fucking life. Same with technology. I don't just make up my own opinions about Kava or Avalanche. I seek out people who have been doing this stuff for their entire life, and then I ask them what they think, and then I actively support to reinforce my understanding of what it is they're telling me. Nothing further than that. I don't try to like outsmart them and be like, oh yeah, well look, I know better than you because I'm just some weird person that is gonna pick. I like kava, you know, because I lived in Hawaii and I drink sedatives. I don't know. I do not believe gold is a good buy. It's basically boring. I mean, look, if you've got a big enough portfolio, sure, why not? But it's boring. It's boring compared to technology. Like, why would you ever want to invest in gold when you can invest in technology? Such a stupid, like, I'm sorry, I don't mean to call you stupid, but that's stupid. Like, that's a stupid idea. People like Peter Schiff are absolute morons. They have no idea what's happening. They're old and gray and really don't recognize the difference. Technology is exponential. It's changed our world for the better, or maybe for the worse. It's up to you to decide, I guess. But I think for the better. So why invest in shit that does nothing? Like gold's not going to all of a sudden have this new advanced feature that changes the way humanity communicates with one another. Like, wrong. Gold is basically worthless in my mind. Even though I have gold around my neck because I can trade it for money and food if I get into a bad situation, but it's not worth it. Like Avalanche, let's just go over again. Avalanche. That's some serious technology. Like if you're like, again, another question, you want 10 grand in gold or 10 grand in Avalanche? Yeah, give me the Avalanche, please. Thank you. Yeah. Why? Because it's technology. If you gave me an offer between any of these in my basket here on the DeFi sector, I would pick them any day over gold, because gold will never evolve to a place where it can change the way humanity communicates with one another. But technology does that on a day-to-day basis. Also asking for DOT. Oh yeah, Polkadot. Thank you for reminding me. Why do I not have that on the top here? DOT is definitely one of my top ones. I'm moving that back up. I don't know why it got shoved down to the bottom. Polkadot is one of the ones I have in my current accumulation in DeFi basket. As you can see, we had a nice cup and handle moving through our reaccumulation channel. Very short-lived reaccumulation here before breakout. I am looking for more reaccumulation patterns, but again, these are all too volatile for me to want to play with leverage in any way, shape, or form. But they do represent a very strong potential for my venture capital investment, which is again an asymmetrical bet, which in layman's term means it could be worth nothing or it could be worth 1,000% more. So from the bottom of the box already to where we are to the peak of the wick, you're talking about a 300% gain for DOT since December. So these are huge potentials. So if you had been accumulating between September and December, only incurring a 20% dip for a 30% gain, that's great. But also let's be sure to remember that, okay, let's go look at Ethereum. And remember that Ethereum, guys, like you don't need to try to outsmart the markets. One of the things that early newbie investors also do wrong is they think that you can outsmart the market by finding like the next big gem. Just focus on the big market movers. They already have significant money behind them, billions of dollars of flowing capital. So if we measure from March at the bottom of our spring here, which was approximately $84 to where we are now, that's a 1,500% gain for Ethereum. And even more, or even less for Bitcoin. I was going to say even more, but that's not true. It's actually less for Bitcoin. Technically, if you bought Ethereum and Bitcoin at the same time in March, so Bitcoin's done 1,100%, Ethereum's done 1,500%, right? Those are amazing plays. Like, why would you want to invest in anything else and like make your life more stressful? You can just play you can play the market movers. Like, you don't need to try to outsmart the market by finding the next avalanche. If you're going to play with the venture capital bag, yeah, you put small amounts, you walk away, you don't really think about it. But in terms of like actually being in the market, you want to be in Bitcoin and Ethereum pretty much like only. Anyways, DOT will go 1-to-1 with ETH. That's almost impossible, dark horse. I mean, what you see right now is a ton of speculation around DOT and very little movement. Again, I trust my tech guys for this. Maybe I'll have another conversation with them, but that's not what we're seeing in terms of like what the chain is actually doing. Ethereum is one of the most used blockchains on the ecosystem right now, and that's a pretty big deal. Our initial longs for Ethereum in our private newsletter went out here at around 380 to 404. Sadly, I closed out a little early on those longs because I could have just sat in there and been making like big bank cash, but still learning myself. I don't always perfect these, but here, this rising gradient bottom here on Ethereum, a little bit volatile. I think you're looking at a 30% range. Yeah. So not the sexiest, but damn son, these are huge gains, and you didn't need to try to outsmart the market and that's where most people fail, is they're trying to outsmart the market by being like, yeah, I'm going to pick DOT like the next big thing. It's like, no, guys, the market already picked Ethereum. Like, the only reason, look, I'll make some speculation too. It's actually pretty easy to get a token's value to go up to some demonstrable level, like say billions of dollars, and it's just all hypothetical. Like, can you trade DOT on Uniswap? That's kind of a good question. Let's take a look at Uniswap. Is DOT on Uniswap? It might not be. YF DOT. I don't know. Polkadot. No, these are probably fake DOT. I know DOT is its own blockchain, but let's take a look here. Number 4. So you have 935 million tokens circulating. I would say this is highly speculative. I do believe this will probably come crashing back down after this bull market cycle. But again, Polkadot and Avalanche are bets that I've made. Like I own those in my DeFi bag. Like, don't get me wrong, I think that there's potential there, but outseeding Ethereum or Bitcoin right now is like, nah, I'm sorry guys, the market already made up its mind. It's like people who are still arguing for BSV being like, yeah, it's the real Bitcoin. It's like, nah, that's not how this works. And the only reason I wanted to look at if DOT was on Uni was I wanted to look at the liquidity of the trade. If I have to look at DOT on Kraken, they're holding the other side of the trade, and that's not valuable information to me, effectively. Like, because a market cap here is like an imaginary number. It's not a realized potential. Although you do have $6.4 billion in trading, like I would love to know how much of that is from USDT. It's probably a significant amount of it. Shout out to CoinGecko, by the way, one of my favorite places to check the charts. I mean, currently Tether's sitting at number 3 with $92 billion in volume, right? How much of that volume is actually coming? How much of Polkadot's volume is actually coming from leveraged trades from Tether? It's probably a significant amount. And again, interesting to see $34 billion in Ethereum trading on the 24-hour. That's a significantly higher, 6 times higher than Polkadot, right? No, I know DOT is not an ERC20 token. I realize that. Sometimes you can find like wrapped versions of tokens. I might be wrong about DOT. Yeah, I already said I own DOT, though. I don't understand how that got lost in translation. Because, yeah, again, I think Avalanche would outpace DOT before DOT would outpace Ethereum. Let's be very clear about that. I think Avalanche is much better technology than DOT. But what do I know? I'm not a technologist. I'm just trying to trust the people that are smarter than I am. Okay, so got Ethereum open here on the 45-minute. I do believe Ethereum is much closer to breaking out than Bitcoin. It's actually kind of at the top of its trading range. Yeah. We just had our spring. It looks like we're about to jump across the creek here. We could make the same conjecture that we did with Bitcoin, that we're in basically a larger holding pattern, effectively. So something where you do see a horizontal trading range coming up from the top here and the bottom. But we're not going to be able to tell for the next, let's say, week or two. We already are very high up here. Like if we look at our initial conjecture, our longs were placed here at 308 following these horizontal trading ranges, 380 and 404. I do believe we're going around $2,600 on this next run. So that's what leads me to believe that this is another reaccumulation range for Ethereum. Here you can see the initial charts we drew. This chart has not changed at all since March. So it's effectively exactly the same way we drew it in March. And I think we're going to $2,600 pretty easily on these next few jumps. So up to here. And I do believe over the next year or two, we'll probably go to much higher. Why do you use the 45-minute chart? I'm not sure if you noticed, but I'm on the daily. So keep that in mind. That says daily. What do you think about ADA? Again, here's another question of Avalanche is better technology than ADA, like by far. And if we're talking about the advancement of protocol layer ones, which is what ADA is trying to do, I would put all my money, like again, if you're going to give me the option between ADA and ADA and Avalanche, put it in an Avalanche. But that's just me. But we'll look at the charts though, because even if it might not be a long-term play, there's potential for trades. And that's an important part to understand, I think, in these markets too, that there's money to be made here. So we have been watching reaccumulation after reaccumulation. And I think we're about to see another reaccumulation here before breakout for ADA. They've got a really great marketing team, because I hear like they're like the Link Marines. Cardano people and like the XRP army, they're like Link Marines, you know? They'll buy and hold an asset regardless of what it's doing or how many people are using it. But I don't know that ADA is actually being used all that much. And it's a pretty important aspect of, is somebody using it? Like, is anybody using it? I don't think anybody's using it. Maybe they will, but when you have this open source technology race, it's really difficult to pick winners. So the best way to look at almost every one of these is just venture capital. You put a small amount of money in, and if you're right over the long term, congratulations. But it's really hard to, I would not be wading into them significantly. Wade into Bitcoin and Ethereum significantly. They're already like market leaders. You know, and again, DOT's evaluation is like purely hypothetical. When you see a multi-billion-dollar valuation on things like CoinGecko, it's not real. Like think about, apparently Richard Hart's Hex has a multi-billion-dollar evaluation. Well, that's not real. You know what? I have friends that started multi-billion-dollar companies, first off, and it looks different. They have real like working products. You know what I mean? They're on daily basis are selling hundreds of millions of dollars of product. Not some guy in a purple chair with a candelabra beside him. Not to say like I don't know what their technology is, but I'm just highlighting the fact that I know people that have made billion-dollar companies, and there's like a pretty stark difference versus their evaluation, right? Those companies were doing $9 to $10 billion a year in fucking revenue. Like that's real money. It's not this imaginary market cap, and that's one of the downsides about market cap. I don't want to go too much into this, but well, we could, I guess. No, we won't do it today. We'll do it tomorrow. I'll go over some of that more of that abstraction tomorrow, because I think it's a kind of a fun conjecture to make, but it's a pretty big difference, that's for sure. Kill Zil Grinder POC indicator on the 1 hour, strangely accurate when it hits the bands. What are your thoughts? I found it looking for that red POC you used. So the POC is called the point of control, and it represents an area on the volume bar. So right now we're looking at ADA or Cardano, and as you can see, the point of control where there was the most buying and selling was around 83 cents. Just like Bitcoin, we had our spring in March. But again, here you compare Cardano, you're like, wow, you know, very interesting, very interesting. I pulled this back here. I like Bitcoin and Ethereum, but in terms of percentage gain, had you put $1,000 in Bitcoin, Ethereum, and Cardano, Cardano's up a little bit more than those two. But again, I don't know why. I don't. Someone, if you know, like, I would love to chat with Charles Hoskinson and be like, so how many people are using it? Can you show me the on-chain data? Because I can't find it on Glassnode, can't find it on Dune Analytics. Like, I'm just trusting that you're telling me the truth. Like, I want to know. Show me the nodes. Show me the network, like communication, you know? I don't know. A lot of people are definitely buying Cardano, but that's a different story. It doesn't mean that the value in the long term is there. So I have but again, back to the point of this, the point of control represents where the previous buying and selling had taken place. So as you can see, we touched into that POC and then we broke out. This often happens that once you start to close above the point of control, you start to see bull markets because you're basically above your previous areas of support and resistance. So anyways, guys, I'm going to leave it at that today. I really appreciate your guys' support. If you enjoyed today's content, please give us the thumbs up. If you're new to the channel, please subscribe and hit that little bell. That way, anytime we go live, you guys will be notified. I'm going to try to do a live stream every single day, no matter what happens. Even if I have to do it from my cell phone in the airport, I'm going to do that. Okay? So it's kind of like a little promise or something I made to myself about 2021 is that I was going to try to produce a shit ton more content than I did in 2020. Spent a lot of time sitting outside. So I appreciate that. Oh, Killsdale Grinder says, but there is a PPS signal indicator. Okay, so if we go to indicators, let's take a look. PPS. Is it a free volume profile they give you? Oh, it's at the bottom. Yeah, I don't know. I can't find this PPS POC. I don't see this. Yeah, I have no idea. Anyways, even to just highlight my point, I kind of remove all that. And what I do look for, I mean, maybe they give you, it just doesn't show me the volume that I'm really interested in. PP signal Wyckoff volume? What's this? Interesting. Well, they are kind of just cell signals effectively, or accumulation signals is what it looks like. Although, unless you know what you're doing, they're still going to throw you off. Yeah, don't trust, even with you guys, make it simple on yourself. Just start investing, remove as much data as humanly possible. That's why I use the area charts. It's much easier just to focus on these horizontal trading ranges, and then try to find the volume springs. Specifically, like here's a beautiful trading range, right? Go on the 4 hour, it'll even become a little more clear. Yeah, okay, so here's a nice trading range. You have your buying climax, your first automatic or selling climax, your automatic rally, your test, resistance, spring, and then here is where you would generally want to enter trade after the spring above the POC. So just remove data. I couldn't find that PPS one, but again, you can do the same thing just by drawing horizontal trading ranges. You don't really need too many indicators. And in fact, the more indicators you add, the more likely you are going to make a mistake. Anyways, we will leave it at that. Thank you guys all for joining us today. This is Teal with the Arcane Bear. I really appreciate your support. Follow the bear, share your love. Follow us. Actually, lastly, just because some of you guys are still here, I'm sure. We'll go back to this one. Follow us on Twitter if you haven't yet. Twitter.com/the Arcane Bear. You can also follow us on Instagram, Instagram.com/Arcane Bear, where we like to post photos of charts and booty, a little bit gratuitous. And then to the YouTube channel, which is I'm sure how you found us today, be sure to hit that subscribe button. Over 29.3 thousand subscribers at this moment. I really appreciate all the support, guys. We're going to keep hammering out these live videos every day until the bull market starts to end. And then we'll do it every day until the bull market is effectively over. And then we'll probably be a bit more relaxed during the accumulation range because there's better things to be doing with your life than staring at charts. And you usually get around a year or two to accumulate before you get a bull market. Let's deal with the Arcane Bear. Thank you guys all for joining us today. We'll see you guys on the other side.